Hi. In this video we are talking about how to invest your money. Before we continue our video, make sure to subscribe to our channel. Hit the bell icon for more videos. To begin investing, you do not need to be a billionaire. In reality, investment is how you become a billionaire. It's past time to dispel the misconception that you need a large sum of money to begin investing in stocks, mutual funds, and ETFs. You will never get wealthy by storing your money under a mattress or in a bank account. If you want to accumulate riches, you must invest your money over time. Do you know that you may start investing in the stock market with as little as $50 per month using mutual funds? You probably didn't realize this since you've always assumed that investing is just for the wealthy. That is no longer the case. In this video, we'll be sharing with you some tips on how to invest if you have small money. 1. Create a budget. Learning how to build a budget for your income, finance is the most crucial rule of investing. Make a budget for everything you can, including energy expenses, rent or mortgage payments, and, most significantly, investments. Set aside a certain amount of money each month to invest, not just whatever money is left over at the end of the month. Because if you don't put money away, you'll usually wind up with nothing at the end of the month. When it comes to budgeting, it's critical to set realistic goals. Start with modest sums of money and gradually grow as you get experience with the procedure. It might be as simple as refusing to eat at McDonald's or go to the movies and instead putting that money in the cookie jar. 2. Cut out your lavish spending habit. Consider keeping track of your everyday expenditures, especially when buying sodas and other unnecessary items, to see what you can eliminate. You may put the excess money into your investing account if it doesn't have a minimum balance. It may appear insignificant, but diverting the additional $10 or so will build up over time and amount to a significant sum. Ronald Read, for example, was a Vermonter who worked as a mechanic before retiring to serve as a part-time cleaner. He bequeathed $6 million to a library and hospital when he died in 2014. Of course, he began with a meager $10, which you may not consider significant at this time. 3. Avoid expensive lifestyle even if you can afford it. Just because you got a rise in your income or obtained a higher-paying job doesn't imply you should go for costly items, such vehicles, clothing, houses, and the like. Instead, invest that extra cash while keeping your current level of living. You may, of course, reward yourself for a job well done, but don't go overboard. What can you invest in now that you know why and how to start investing? 1. Stocks. Stock is a portion of a company's ownership. Investors' assessments of the company's success, including leadership changes, new product releases, and financial performance, influence stock prices. Stocks are a type of equity investment that reflects a portion of a company's ownership and rights you to a portion of the company's earnings and assets. Shareholders of common stock have voting rights but no certainty of dividend payments. Preferred stocks don't provide you any voting rights, but they generally come with a dividend guarantee. 2. Bonds. Bond is effectively a loan to a corporation or government body that pledges to repay you with interest over a certain period of time. Municipal bonds, investment in your local schools, hospitals, and towns. Commercial bonds, lending money to businesses to help you earn greater rates. Savings bonds, and treasury bonds are all types of bonds. Bonds, as opposed to equities, are typically less risky since you know precisely when you'll be paid back and how much you'll earn. 3. Mutual funds. Mutual fund is a collection of investments managed by a single organization. When you invest, you do not select individual stocks or other securities. Rather, the mutual fund does. Mutual funds are less hazardous than individual equities because of their inherent diversity. Mutual funds provide access to professionally managed portfolios of stocks, bonds, and other assets to small and individual investors. As a result, each stakeholder shares in the fund's profits or losses in proportion. Investing may appear to be intimidating, but it isn't. Be sure to do your research properly before considering an option. Starting off with a small initial investment and keep working towards a long-term goal is the best way to go. Thank you very much for watching this video. We'll like to give you another interesting video for you to enjoy next, but before then, we will be very happy if share it with your friends on social media. Take care, bye.